Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap. It is the 30th of August, the last of the month. As August, back and forth, August has come to an end. We'll see if September has the same things in store for us. Won't be surprised if it does. And welcome out, everybody. Hope you all had a great day, both in and out of the market, as we get ready to head into a 3-day weekend. Pretty uneventful day in the market from a technical perspective. A little pop on the open, gap on the open, followed by some quick profit taking. Of course, we know the context, right? That's right below the 50-day moving average on the daily chart. Did see some drifting to the downside, stabilized throughout the rest of the day, as it was just, let's not get crazy one way or another going into the 3-day weekend. And that's kind of what I was hoping to see happen. I know I probably was not alone. So we're going to get into next week, short week, battling resistance. Going to be an interesting one. And welcome out, Patricia. Great to see you as always. I hope you are doing well. As we kind of take a look at the indexes, I mean, the big story is still resistance. Welcome out, Scott. Great to see you, sir. Hope all is well. We're knocking on the door. Again, we've seen some selling here today. As you saw, even on the intraday, really not much of a, clear sell signal right now, just battling. I believe we probably need to get back on top of the 50-day moving average, personally on the S&P 500. And welcome out, Lauren. Good to see you. Hey, Jonathan. And good afternoon, Andy. I certainly understand. I think we need some downward movement personally, Andy, but I tend to agree. If I had to blindly make a trade, bull or bear going into next week on the S&P, I would pretty easily go on the short side. I would. I think we need a little more confirmation. That's kind of a personal preference thing, I believe at least. But I do tend to agree. Resistance has held all month long. I think odds are resistance holds, but eventually we will either break support or resistance, right? And that's really where I believe we're going to get our next really interesting signal. So I do tend to agree with you, although I think we need a little better confirmation from a broad market perspective. Found some really interesting bear plays, though, going into next week for sure. You said it best, Lauren. I was up until like 1 o'clock last night, desperately trying to fix my computer. I did get it fixed. It was an update gone terribly, terribly wrong. I had to do about a million different things that I had no idea how to do. Luckily, my brothers are much more tech savvy than me, were able to talk me through it. Bless their souls. That wasn't much fun, but the deed is done. So yeah, I'm ready for Friday. Stayed up a little later than I had intended. And welcome out there, Ilka. Great to see you, sir, as per always. So really in the S&P and our other indexes knocking on the door. Over on the Dow, we did follow through. This is actually broken through resistance, not a particularly great close. Again, with all of the markets at resistance and all of those 50-day moving averages looming right on top of us, I think it best to kind of clear out of that. If we do break to the upside, I think it's best to kind of clear out of that stuff before we get too crazy. Of course, that 50-day moving average really lining up nicely here at resistance, both this top, from April, but also our tops, not too far off our tops in October. So still knocking on the door, a little more upward movement, overall, technically was able to break through resistance here today. But that is about as good as it got. Pretty much from there, it was kind of a sell-off. And good to see you, Marie. Great to have you here. And Armando, welcome. Good to have you, my friend. On the NASDAQ, same thing. Everything is just right below resistance, right below that 50-day moving average. And so when Andy says puts going into next week, I think there's a leg to stand on as far as that goes. But much like we talked about yesterday, when we're this close, I mean, we're going to have our expectations, we're going to have our biases, and I'm always going to bet on support and resistance. That's why I like it when it breaks as a signal, because I believe it's hard for it to break. Breakouts could happen as early as Tuesday morning, and they could not happen at all, right? So, we are at that price point, in my opinion, at least, over in the broader market. In the rut, not much to see here today either, just a little bit of a back and forth day. Another potentially lower low, but support. The big story on the rut, of course, is really what it's been all year long, is support continues to hold. We, as condor traders, we can't complain. We've been tested, right? We've pushed right to our edge a few times on this last several months, but so far, we've continued to hold, and I would expect that continues to be a strong level of support. If we do get a clear break below it, I do expect to see some selling to the downside. I think it's certainly lagging behind the other indexes in the sense that they're battling resistance, and it's kind of just hanging out, closer to support than its longer term resistance or even its swing high kind of right there in the middle. So that is where we find ourselves in the indexes. Not a whole lot different than yesterday, really. And that's not really a bad thing. When I saw the futures market this morning and it was up big and trying to push through, I was thinking, don't break out on the Friday before a 3-day weekend. That's not what I want to see. And luckily it listened. So luckily it listened, at least for today. Over in the materials, nice little pop back above that trend line. Pretty complicated chart. We do have it's kind of hard and it's not perfect, but we do have a little bit of a trend line that's kind of forming here. But we did kind of get back on this above the right side of this trend. Let's zoom into a weekly chart here. See what that's looking like. Not telling us a lot, right? I guess we're still testing, this trend line. I think you could make that argument from a weekly perspective. Yes, we did breach it on our previous candle, but we never confirmed it through downward movement. So maybe you could argue that this is a pullback area. I still think it's more mixed at this point in time, and I do believe it's still a little bit skewed to the downside. Personally, as far as resistance goes, we probably should be keeping an eye just north of where we are, right about 57.25 on the ETF. That is, of course, a pretty significant support zone going back in time. Certainly something worth keeping our eyes out for. Over in energy, a little bit of a doji day right in those averages. We're kind of putting together a little bit of sideways action at the bottom of the we're still skewed to the downside, I believe, but we have held support, certainly worth keeping an eye out for. I came off a little bit on the bearish side as I was kind of preparing for next week. I'm still bearish, but I am a little less bearish this week than I have been for a bit, and certainly than last week, simply because at least as of right now, we have a potential double bottom here. Now, no confirmation. I still believe that's going to be tough for it to break through that resistance, but I do have to respect that price action, do have to respect that we've held some support on many of the stocks and certainly here on the ETF. So maybe we need to go into a little bit of a sideways range. A break above would be a bullish signal, although I would argue not a great trading signal. Personally, that would be my bias there, though. Break to the downside would be a very nice signal. There still will be some bearish retracements, as we'll see. So if we work into this resistance here early next week, there's still some really interesting bearish retracement candidates, in my eyes at least, over in the energy sector. As we'll see. We'll get to them here before we wrap up today. Over in financials, kind of copy paste the market, got a little bit of room, but one of the big differences between the financial sector and the market as a whole is we still have a little bit of room before we get to what at least I believe is our next real level of resistance up here at that 2730 range. I believe that you could argue that we've got a little bit of a swing resistance right here, and I would agree with that. But I think the better or more clear signal will be breaking this actual pivot from up here. So again, still being shy with the banks in particular. Found more, I only found a few things to really start following early, at least next week, in the financial sector. MasterCard, which I don't know if we call them tech or finance, but they've got a nice breakout, a couple of breakdown, bearish candidates as well. I think we need to be very careful with the banks. They're very nervous about any rate stuff, right? And so certainly I'm going to maintain that, but we do have a little bit of room before we start challenging serious, at least, levels of resistance, in my opinion, on those banks. And welcome out there, Amy. Good to have you, sir. Hope all is well. Industrials, basically very, very similar, knocking right into resistance, testing that 50-day moving average, leading the way a little bit, right? As far as the sectors is concerned, most sectors have a little more room before resistance. We're having that conversation right now over in the industrial sector. A break above that, you have to like it. I believe, especially when we're just thinking about the ETF, there's just, this is kind of the middle line right here, right? And if we can kind of find our way back above it, there really isn't much to hold us down. And so breakout in the market, while I don't love the industrial sector as a whole, and it certainly can be an area that can be impacted a little more dramatically by trade war stuff, I think I do like the space that I see on the industrial ETF. If we can break through that resistance, it'll be there. And hey, I'm glad, I'm happy to help, Andy, and it's been a lot of fun, and I'm not done. So we'll kind of shift gears a little bit, but I'm not going anywhere for sure. Over in tech, just hanging out at resistance, right? Again, the positive thing about tech is we've got this increasing support level as we're moving forward. We've technically, not much follow through, but technically have created a higher high as well. Watch the NASDAQ, watch that high that we put in there last week. A break beyond that, again, a pretty darn good signal to the bull side. I expect the market's going to need to break out for, whether it's industrials or really anything, technology or whatever, really going to need to have the market break to do that. But if it does, that is one of the areas that's a little, can be a little more intriguing to me. We do have some interesting names in tech. None of the S&P companies are actually reporting, at least I don't believe so, next week. We have things like CIEN and Zoom and MongoDB and a lot of those, bigger non-S&P 500 technology companies are the names that are reporting next week. So that'll be an interesting one to keep an eye out for. But definitely keep an eye on that swing high. Keep an eye on the NASDAQ, a break above that. I still like the NASDAQ and the discretionary, basically NASDAQ stocks for the most part, heavy NASDAQ stocks, more than anything if we break to the upside as things look, at least currently, for those more aggressive type of directional plays. Over in staples, kind of carrying on yesterday, just a little bit of a drift to the downside. We're going to have to make sure we get a little bit of a turnaround signal, right? Whether that's a break of the resistance or a pullback, reversal type candle, doji hammer, whatever. But I do believe we still continue to ride this train, look for bullish opportunities. There are some interesting bears, though, from early trades. I like things like Coke and Pepsi and Procter and Gamble. I think most of us probably do from a bullish perspective. But for brand new trades next week, I wasn't really finding a ton of bullish things in the consumer staples sector, which makes sense at resistance, kind of in the beginnings of a pullback. Maybe, I don't know. We'll have to see. It has been very strong. All pullbacks have been met with quite a bit of buying. I continue to feel comfortable as a bull within these more defensive sectors. Same with the utilities, knocking at the door of another all-time high. We are getting a little extended on the ETF, but it's utilities, right? So they're not too terribly crazy here. Certainly, as we kind of are moving forward, any pullbacks above 61, I think, should be met with smiles on our faces. If we get that, beyond that, I'm still comfortable with it. I don't really even expect that to happen in the short term, but certainly would be very open to it. I did find a few interesting utility plays going into next week, though. So we'll take a peek at them before we're done here. Healthcare just continues to be stuck right in the middle. I mean, and this is really just right in the middle. Going to need some development. We talked and we've looked at, the healthcare plans in particular lately. They're shaping up for maybe some nice retracements, but going to need a little bit of development, I believe, going into next week. Not the type of things that I believe we can build a trade for Tuesday morning. Going to need at least a doji or something to that effect. We do, of course, still have some, stocks that have held up. But boy, this is a messy sector, in my opinion. We're stuck right in the middle of a pretty respectable resistance level, a pretty respectable support level. I continue to overall maintain. I found a few interesting things, but broadly speaking, I still argue that basically everything else feels better, whether it's bullish or bearish to me right now than the healthcare sector. And thank you, Marie. Appreciate that. Over in discretionary, nice kind of follow through in the beginning of the trading day, got caught up with the rest of things. Now, part of this is probably the ugliest thing we'll see today. I hope it is. And that's Ulta. Big miss on earnings, just a huge gap to the downside and just nothing. Not a single buyer, it appears to be found all day long, top to bottom. big, huge red candle. Now we are working into a support level for whatever that's worth, not worth a lot to me. It just maybe means I'm not going to make a bearish trade, but that is a tremendously negative response to earnings on Ulta. So they definitely played a little bit of a part, but again, it was more broadly focused, as it oftentimes is these days in the market. Gap up, fill that up, but certainly an area that I do. This is my favorite area personally as a bull. This is the area outside of the defensive sectors that I rank the highest. This is the area that if the market breaks out, I'm probably going to be looking towards the most if the market breaks out to the upside. If the downside, I'll find other areas. There are certainly bears out there in this space too. We do have a little bit of resistance on the ETF. As you can see, we kissed that here today. Beyond that, we've got a lot of strength. We have created a higher low and we have created higher highs. So we've got a little bit of positive momentum. While Ulta was a disaster on earnings, I still believe that for the most part, we had more positivity in these recent earnings reports on the retail stocks within this ETF. So I'm going to continue to like this probably the most if the market breaks to the upside. Over in the REITs, just another day in the REITs, still not pulling back, still floating above all of the moving averages, just the slow, steady, methodical climb to 40, it looks like at this point in time on the ETF, much like utilities, much like gold and silver as of late. Any opportunity, any good technical setup in the REITs, if we're interested in them at least, certainly something I think worth looking at. And good afternoon there, Linda. And hey, Emily, great to have you here. Yeah, it's Ulta you do something like that, Emily, and you go into my do not touch list. Ulta will be off of my list. It's not something I actively follow on a regular basis, but I will work with it and it can have some good trade setups. But until something clears up there, it's kind of on the Boeing list. It's on the Philip Morris and the Altria group. You start doing anything weird and I'm not messing around with you either way. Sometimes I'm really wise for doing that. Sometimes I'm just a giant coward and much ado about nothing, but that will always be my methodology. I believe I'm pretty wimpy. And lastly, over in the communication services sector, knocking on the door of resistance. We'll look at Google here in a few minutes. Well, let's look at Google right now. They're knocking right on that door too. They were bumped right into that, just shy of that resistance zone here yesterday. No follow through here today, but we did hold support coming off that 50-day moving average. Wasn't that long ago that we had that tremendous gap to the upside on earnings, very sideways. Another one of those stocks is going to look awful appealing to me if the market breaks to the upside and it's able to break to the upside as well. Still going to have to wait, still need to get above that resistance, in my opinion, at least, but certainly worth keeping an eye on. Exactly, Marie. Give me the boring stuff. I am not an exciting guy when it comes to trading. Maybe I'm not exciting at all, but I'm definitely not exciting when it comes to trading. I want to be as boring as humanly possible when it comes to trading. So as you kind of look at the ETF, knocking on the door, break above this is a pretty good technical signal. We are going to need Google, and likely we're going to need Facebook at least pulling its weight. And this is going to be an interesting one here on Facebook. We have created that lower low here, but we've rallied back above those moving averages. That 9 is kind of starting to flip around. So a little bit of a mixed signals going on. We've got a lot more room until we're challenging what I would believe is resistance in the 191 range on Facebook. Definitely something to keep an eye on, as we always do when it comes to XLC. If we're trading XLC, we do have to be aware of how heavily weighted the Google and the Facebook shares are within this ETF. So that is where we find ourselves sector-wise. Again, we're in a really interesting spot because we're at resistance in the market and on many of the sectors. It's putting us in a position where we're going to have breakout candidates aplenty, and we're going to have retracement type of candidates aplenty, and we're going to have breakdown candidates. Hey, if you haven't been able to show well in this week's market, we've seen some pretty good movement to the upside this week in the market. If you've been lagging behind, you might, and the market starts selling, well, you might be something in the bear list, or at least worth thinking about from that perspective. So we're going to be in an interesting spot for the bulls and the bears going into early next week. In my mind, going to be a fun week in the market. As we move over into the VIX, not a lot to see here today, little mellow, but we did see some selling today, so no surprise, a little bit of a move to the upside off of yesterday's, these last couple of pullback days on the VIX. The dollar just continues to remain very strong. Where'd you go, dollar? There you are. Following through on that breakout. And the cool thing about this dollar chart, we've talked a lot about it. I've been waiting for a break, as most of you guys know, for a long time. But if we look at this on a monthly perspective, right, lots of our little lines there don't seem such big deals when you look at it on a monthly perspective. We broke resistance on our last candle, right? And we closed above that as a confirmation candle here, this second candle. Not a lot of resistance until we approach that 100 zone, and not real strong resistance until we get even a little bit higher. Definitely going to be continuing to watch the dollar very closely in the days ahead. That's a pretty nice break. I've been waiting for that break for a very long time. May not be something that I'm looking to position trade on Tuesday morning, but if we can continue that upward movement, pullbacks could be something if we're thinking about a position type trade on something like UUP or something like that. Certainly worth monitoring if we can follow through on that candle. Definitely like what I'm seeing on that side of things personally on the dollar. Over in the metals, just another day for silver as it just continues to just rock and roll. We've got a little bit sideways, a little back and forth these last 3 trading days, but it remains tremendously strong, very bullish on silver. I think that's probably pretty unanimous around traders right now, at least technically speaking. We're just cooking on all cylinders. No reason to suspect that that'll end on Tuesday or Monday of next week. Any pullbacks, any dips back into that 18, any breaks to the upside certainly could be tradable signals, in my opinion. Going to need a little development for a new swing trading entry probably, but I'll be looking for one if I don't have some silver. Natural gas going to make it interesting. Going to have to wait a little bit longer. We did break that 50-day moving average yesterday. No follow through today. And those of you who know me best know how important that follow through is to me. Still think it's a little more of just another little tiny win for the bulls. I think super aggressively speaking, we could talk about setting up bullish trades above this weekly high going into next week. Still pretty aggressive. I still think we'll get better opportunities. Don't have to, jump into anything at this point in time. I think we still need to let this one battle out a little bit, but we did close above the 9. We did break and breach that, or we did break that 50-day moving average, and we did close above that 50-day moving average today. No continuation of the momentum on the negative note. On the positive note, we're still above it. So a little bit of a mixed signal. We have now created higher lows and higher highs, right? And so certainly if we're, been looking and waiting, if we've been waiting for that bullish opportunity, I believe that this is the first time where we could really have that conversation. I would argue it's still a little early for my tastes, but I also see a lot of space. And that's why I don't think we have to run and do things that are uncomfortable. Ideally, maybe we hang around, early part of next week, continue to test these tops that we've, kind of established today and yesterday, and then get a break to the upside. Because the one thing that really does stand out to me on natural gas is if we can win this fight, and so far it looks like we've got a shot. To me, there is not a lot. Now, there is a lot at 250 or approximately 250, a lot of resistance. I would expect that to be a significant challenge if it gets to that price point. But between the breakout and that, I don't see anything that scares me from a resistance perspective. So I do see some space that we could work with if we can carry on that momentum. If we would have had a green candle today, created, closed higher than yesterday, I think we could have really had that conversation. But I think that really, really matters on natural gas right now. That is in the very early phases of a technical reversal to me. It's going to have to do a little bit more before I'm convinced. Speaking of follow through, we did see crude break through that trend line, or at least approximately that trend line. Depends on where you had it yesterday, but we did not see any follow through, completely flipping around here today. As we've, I'm not the only one. I know Coach Mark and other coaches have said a lot too. Right now, crude is just a tough place to be a swing trader. It's a pretty comfortable place to be cash flowing, really on either side out of the ranges, and it's a great day traders market. I'm not a day trader, but if I was, I'd like to think I'd be having lots of fun in crude oil right now. It's just a very tough market to swing trade right now. Nothing that today did or that this week did really changes my opinion on that. At this point in time, I will continue to kind of harp on that as a way to be working with crude oil. We'll get a good signal in the future. Right now, you could argue, that the tops here could be still a breakout, right? Just didn't happen today. Pretty aggressive to the upside. You could, argue that today was a confirmation candle on a pullback. Pretty extreme argument, I would think, but I think maybe somebody could make it. Break of support, probably the clearest signal that I could see potentially happening in the near term if we continue to, if we do test and break below that. But I say, why mess around with this directionally right now? Cash flow has been pretty darn good on crude right now, on USO or the crude contract itself. So I'm going to continue to lean on that side of things. So that is what we have going into the next week, a shortened week. Going to be an interesting one for sure. Knocking on the door of resistance. I don't expect all week next week is going to be able to be just hanging right below resistance. Not in these current market conditions. We'll have to see if that's where it goes. As we kind of take a peek at some things going into next week, definitely some interesting pullbacks on the gold and the mining type of companies. AEM here, for example, little pullback sitting on its 9 EMA as we currently speak. Air Products, going to keep this one in my watch list until it either breaks down, and I'm convinced that not going to happen anytime soon, or it breaks to the upside. I don't care how long it takes. It can take as long as it wants. I would like to be there to at least make the decision if and when it does break that resistance. Over in CLR here, energy company, not really performing all that well. Got a little bit of support, double bottom, kind of like the sector ETF overall, showing a little relative weakness in my mind. Break below that could be an interesting sell signal. Gold, another one of the, gonna need a little bit of turnaround candle probably, or at least some upward movement, but nice little pullback in a lot of these metals companies. HFC, another little bearish retracement type of candidate in the energy sector. Unlike the sector, unlike CLR, we did break support. We've still got a long ways to go before resistance. So again, going to need some sort of confirmation before anything can go. But I do believe if we're still bearish in energy and looking for some entries, this might be something for me. On the other side of things, I wanted to, we got this, these midstream companies tend to hold up a little bit better. Certainly they've held up a little bit better than the producers and the integrated oil and gas companies lately. Magellan here, I first got into them, I put these guys on my list at, I don't know, 45-minute, or I don't know, the market probably hadn't been open 40 minutes yet at that point in time, and they hadn't really made this huge run. Probably the upward movement that we saw here today, probably going to make risk to reward virtually impossible to be comfortable with for me. Probably going to have to go ahead and delete them and just wish I would have right. Over in Murphy, much like Holly Frontier, a little bit of a shallow pullback, broken support. So if I'm still looking, and I still am, I'm still bearish in the energy sector, not as bearish as I have been, but still bearish. So certainly something, I wanted to have a few bearish retracement type of candidates in energy going into next week. Newmont is in a really interesting place. And I don't know if this is something we can work with or not. When you look at the daily chart, break, and a good break, I mean, a nice solid break of resistance. We've pulled back. We're chilling. We tested it on the intraday yesterday, little doji here today. Price makes a lot of sense. Really like the ways that daily chart looks. But when we look back at a little bit more history, we've got quite a bit of overhead, not too far away of where we hit our head off of that initial breakout. So this is one of those that, I think you can make an interesting case to try to buy the bounce off of the breakout point, but I think you have to respect that double top. We've already tested it. That gets in the way. Might, for me, probably going to be a watcher. See if we go sideways here, ideally kind of back and forth for the next couple of weeks, and maybe mid-September break above 41, take out that resistance on that longer term time frame, and then get rocking and rolling. But I like the break. Just don't like that resistance looming right above us does kind of concern me on Newmont. Over on PVG, another metal and mining company here, a little bit of a pullback. Definitely found a lot of candidates. These were just some of the ones that kind of stood out to me personally, but there were certainly a lot of interesting candidates on the pullback over in the metals if we're looking for them. On the other side of it, we've got Dow Chemical here, been struggling tremendously. Last week hit an all-time low, granted kind of cheap because they've been around forever, but this version of them has only been around for a few months, but it's the information that we have to work with. A little bit of a bearish retracement candidate, I believe, over in Dow. Over in BG, probably going to be a tougher one to trade. Some of these things, I think, with the way the market moved yesterday and today, are going to need a little bit more development going into next week. Did see that doji forming here, so maybe something can look at, but don't really love the way that finished its day. Over on Bud, on the other side of things, I don't like gappy stocks. These guys are a foreign stock. That's why we see all these gaps on them, and I tend to shy away. But one thing that kind of stood out to me, we've got a pretty good long-term trend here, right? Let's see if I can draw a line here and make it actually sensible. Got a little bit of an upward trend here. We didn't hit the line, but hit the general ballpark of it. Kind of have not yet broke resistance, fighting that 20, as long as that 20 is above us, boo, I'm not interested. But if we can kind of break to the upside, maybe something in there. And if we look at this on a longer perspective, get rid of that guy so we can actually see it now. It's pretty nice looking pullback to me on a weekly perspective. Nice upward trend, caught a reversal several months ago, pulling back, doji at the 9 weekly. Not usually my cup of tea, but it kind of caught my attention going into next week. Think we have to take out those highs at the very least, and maybe it's one of those that happens. We wait for the next setup. But looking at that weekly chart really got me interested. Foot Locker had a big gap and drop on earnings, rallied back up with the market this past little while, bumping into that 9 EMA, a little bit of a gravestone doji here developing at that old support level. Certainly think that belongs in a bearish watch list personally. Hasbro, kind of similar situation, better response than Foot Locker, but a gap down, rally back up. We're now working into those moving averages, into that old support zone. Again, probably need a little bit of movement before we can get any confirmation, but the price does make sense if I'm looking at it from a bearish point of view. KDP, another one, broke down very heavily last week, put together a little floor, bearish retracement, testing that old resistance or old support as new resistance. Doji here today, probably need one more candle of development, and really anything, ideally this, when I'm looking at this pattern, ideally this old support holds as resistance. But it is okay if we run up a little bit. We can't take out resistance, right? Resistance is up here at 2820, thereabout, to me at least. So any rally up into here, if we get a little bit of a deeper pullback and get some confirmation to the downside, could be in play. McCormick, another one of those, looks a little bit better on the weekly chart to me. If you look at these guys on a weekly, just hanging out on that 9 EMA that is held relentlessly. And so when something's doing something over and over and over again, I think it wise to at least entertain the idea of it doing it again for the 17th or whatever straight time. Probably want to see some upward movement. Could be in this already, right? There was an entry candle here, in my opinion. We went up maybe just enough to get into confirmation. I don't know, knocking on the door. Certainly a nice looking weekly chart to me. Nomad knocking on the door of a breakdown. So hanging out, one of those stocks that really kind of going against the grain of the market, held up this week with the market showing a little bit of strength, but the market's at resistance. These guys are at support. A break below that would be a bearish signal to me, at least. And hey there, Jimbo. Yeah, absolutely. The last recap, but you'll see me. I'll be able to sneak into the halftime report a little more often. I'll try to get in there, every week or so we can talk. Some sectors. We can talk some stocks. Of course, I'll still be over on Twitter too. So make sure you're hanging out with me, with us over there. That'll be another easy place to look at, to talk charts a little bit. See, breaking down, hanging out right below that breakdown point. Again, a lot of weakness. That was a big break in my opinion. Might need some development, but have to like where that is. Vector Group's interesting because these guys are the like the vaping tobacco. I'm not exactly sure how that works, but I know that some people do it. pullback. I like the chart in a lot of ways, kind of pulling back, starting to build a little bit of support, but there's been some pressure on the vaping is finally showing that it might have some negative effects here. So that might be a little more risky or volatile because of that potential news. We've also seen a lot of movement in Philip Morris and Altria Group on that merger news. So the chart's interesting. I don't know that the company is interesting enough from a trade to want to trade if that matters to you. I would expect something like this. I go into it with it could more easily whip me out than Coca-Cola out of weird news. Maybe I'm right or maybe I'm wrong, but that's kind of how I would approach it. And yeah, I don't know, Jimbo, that 2:30 is going to be weird. It is. For the first little while, I'm such a creature of habit. The first month is going to be weird. I'm going to be sitting at the computer and thinking, oh, wait, okay, well, I guess I'll just hang out here. I'll go through the same routine, though, quite honestly. I'll just start it a little earlier because this is always, well, not always, but for a very long time, this really is my personal routine that once the market closes, I go through the different sectors. I look at the different stocks and the big stocks and stocks that I like to follow, things in the reports, and kind of get that view. I like to do this process before even opening up the trading account because it gives me what I believe is the best bias I can have, right? I know kind of what I'm thinking about, if it's going to impact my management, going to impact on new trades I might want to get into. So I'll still do this. I'll just do it faster by myself. It'll be a little more boring probably, but I'll really do about the same thing, just back by myself. Over on WWW here, going to need some development. Got a little bit of mixed signals. We've kind of created a higher high, higher low situation. Got a lot of resistance. Got the 50-day moving average started to slow down here today. Maybe it was just because of the day in the market. That could be the case. Got the 9 crossing back above. So going to need some development. This is one of those type of patterns that kind of, if this trend line, and you have to forgive me, that's not a great trend line, but if this one does get violated and resistance holds, maybe could be something there. Again, that one will definitely need a little bit of development in the days ahead. AIG and AXP both showing some weakness. Got a little bit of a floor that's developed here on AIG, breaking just below that today. Probably need some follow through, but if you kind of look longer term or look back a little bit, there's not, this is a, pretty respectable support level. Have to worry that maybe, while it's kind of hard to see because it happened on a gap, it could be a double top that we have to respect. So certainly a little bit of weakness on that side of things. AXP, a little bit of a retracement type of thing where, we've already made those lower highs and lower lows, don't really have a lot of support. We have our swing, of course, but don't really have a lot of support till we approach that 200-day moving average. So if the market or the sector does move to the downside, certainly there. We had N and O, both of them in the stock report this week. Both of them are REITs, knocking on the door of a breakout on O, still knocking at that major level of resistance. That's always going to catch my attention. Yeah, I'm only really interested in there on WWW, Jimbo, if we develop in the, probably throughout all of next week into some bearish signals. If I'm going to go bull, there's going to be a lot better candidates, I think, personally. NNN here did break out here today, did close above that resistance level. Probably should clear out of these last few wicks that we've seen develop over the last week and a half if we're not here already, but certainly some nice breakout candidates within the REIT space. Healthcare got a little bit of a bearish retracement on ALKS here. Going to need to follow our healthcare plans, but I definitely want to for bearish retracements. Just going to have to let things develop going into next week on both Humana and United. Certainly interested, a lot of weakness over there, but not going to be able to, I guess aggressively, maybe you could argue, we go in below today's low on Tuesday, but boy, that's pretty aggressive. We have NVCR kind of dancing on that 20-day moving average, so a little bit of a bear pullback, a little bit of a bull pullback, and of course, a little bit of a bullish breakout in Zimmer Biomet here, knocking at the door, had a great response to earnings, gone sideways pretty much ever since, broke out of some major overhead resistance along the way when they did break out on that on those earnings. Certainly a breakout candidate. LHX still in the breakout list. Just going to have to wait until we get through there. I'm going to continue to lean on the defense industry. We've got CCL here, a little bit of a bearish retracement developing. You got FND here, a little bit of a breakout potentially developing. Let's go to a weekly chart here. You can kind of see that we've just taken out some resistance here on the weekly chart. Probably need a little more upward movement, probably more of a watch list than a set a trade up on. Maybe we could have caught this pullback if it was Wednesday, but alas, it is not. We've got info knocking on the door of a breakout here as well. So just going to have to get some follow through. JetBlue, big drop, rally with the market, big doji here today. Again, development is kind of the name of the game with these bearish retracements. For me, at least, they're going to need a little bit more movement to the downside, but there's a lot of things that are shaping up to be interesting retracements. KR, old Kroger here, really nice signs of reversal. Broke big up here, pulled back, created a higher low, ran into resistance, pulled back, knocking on that 24 again. Reversal characteristics going on in my eyes over on Kroger. Mickey D's, same as always, just going to look for opportunities. A break above resistance, I would consider one of them, especially if it looks the right way. Rost, another one of those knocking on the door of a breakout. True, another one of those knocking on the door of a breakout. Texas Roadhouse, new name that I don't typically follow, broke down, quite a bit of selling. It's kind of retraced. We've got that weird rising 9, falling 20, pinchy type situation developing. Going to need some clarity, but some clarity to the downside, I think, could be an interesting bearish candidate. Over on UNP, what do we got over here? Another bearish retracement at that 200-day moving average, already making lower highs and lower lows. Certainly a bearish retracement candidate to me. WBA, a little bit of a support level, not a lot holding us up for a while. If we go into, say, a weekly chart, now we're going to need some development here, right? We've got a bottom potentially that has formed, but these guys have not been strong as of late. Going to need some time. Probably can't play a retracement on these guys because we have tested this on 3 occasions and it's held every single time. So that'll go into the breakout bin. On the other side of it, Walmart's going to go into the breakout bin. Break above that resistance. Of course, that's an all-time high for us. So break above resistance could be in order. AEE knocking on the door of a break in the utility sector. AEP, better looking one in my opinion, knocking on the door of a breakout. Knee I had in for a potential pullback, but Coach Slavic kind of talked me out of it with some newsy stuff with it out there out in Florida. And of course, unfortunately, we have those hurricanes going on. So if you're out there, be safe. So maybe want to shy away from that. Would need some development anyway. Also, a littler company here, nice high base developing on TERP. These are a smaller company, not an S&P company, but certainly a great overall trend. Clearly been trending, maybe even outperforming the sector as a whole. Nice high base going on over there. AKAM, breakout candidate. Autodesk, there's going to be a watcher for me at least. We had this big gap down on earnings, but we really bounced back all day long, and I don't like that. I like this as a bearish retracement candidate potentially, but we saw a lot of buyers stepping in. We looked at Ulta, everybody was selling. We look at Autodesk on their big gap. That was a big gap down on earnings for them. I mean, remember, they opened way the heck down here. They really fought back. So this is one of those I do want to keep an eye out for, but I don't think is a great trading candidate necessarily with the really the will that the bulls showed post earnings. Over on CERN here, has already broken down, a little bit of retracement. Conservatively, could probably look at the break of support. Still a lot of room to the downside. Still going to be looking at it from that point of view. Old checkpoint here. A little bit of a bearish retracement potentially developing, broke some support. Again, going to need a little development, I think. We looked at Google, HPQ, another one of those nice retracements, gap down on earnings, working its way back up, filling that space up, going to need some sort of movement. Shop, nowhere near there yet. Well, I don't know. Maybe I shouldn't say that when I put them on the list. Of course, these guys, many of you guys trade them. They were on the reports a few weeks ago. We hit our 400 target. So they're kind of in the pullback phase. Now, when I put them on the list was a little later in the afternoon, and they were down here. I guess I should have been looking at them instead of looking for more things. So they really came off of that intraday low. So, I mean, we've got a hammer candlestick here that's developed on Shop. So certainly could be on the list going into next week. I mean, I think it's wise when you find something that's just on fire, like Shop is, to of course keep an eye on it when you get an opportunity that you like. Over in TME here, just one of those big drop, rally back, testing the old support and the 9 EMA. A little bit of a doji here today, showing a little bit of a slowdown. And lastly, over on SMH, of course, this is our semiconductor ETF. I really do have some interest in the semiconductors, and as I kind of look at them, I preferred the ETF. This go round. That's usually not the case. I usually prefer stocks, but I actually did. If we do break in the market and we break in the NASDAQ in particular, we break in semiconductors, I like this ETF. We've kind of created that higher low, a lot like the tech sector, very clear, identifiable resistance level. Probably needs the market to break before we can do anything, right? It probably can't break out if the NASDAQ isn't, but it was really strong. Before all this trade war, this most recent round of trade war stuff, this was one of the hottest areas in the market. I haven't forgotten that. I'll definitely be keeping an eye out for it. I thought personally that the SMH made the most sense, especially if we see something break early next week, which I don't necessarily expect that to be the most likely thing, but doesn't mean it won't happen. So that is what I have in my watch list preliminarily, at least going into next week. Ladies and gentlemen, I guess that'll do it for the market recap for today, for this week, and for a while, if nothing else. But I've really enjoyed going through talking stock with you guys every afternoon. I'm not going anywhere. You'll still see me over on Tackle Trading. You'll still see me over on Twitter. I'm trying to come up with a couple of new ideas, things that we can do over there as well. And I wouldn't even know how to do that, Jimbo. I saw you ask how you do. And welcome, Tavo. I wouldn't even know how to do it on Facebook or Twitter or Instagram. But I've got some other things planned for you guys. So like I said, I won't be gone by any means. I'll certainly have an opportunity to sneak into the halftime report a little bit more often now, which is always fun. It's always fun to hang out with the other coaches over in there. And yeah, me too. I'll miss it. I'll miss hanging out with you guys. I really enjoyed talking stock with you. On a daily basis. It was really helpful for my routine. It made sure I was never getting lazy, never taking a day off, because if you got to talk to people, you at least have to know what happened, right? So I hope it kind of gave you some ideas for how you can approach things in your own routines as well. You don't have to do it the exact way I do, but I know that routine is so important to all of us as traders. Having hey, this is the way I go about it. This is how I build, my ideas, my watch list, my management plan, all of that fun stuff. I do really believe it is important for all of us to have something that we're comfortable that actually works. So I hope it was able to give you guys some ideas along the way, but it was a lot of fun. We'll definitely this isn't goodbye by any means. I'll be seeing you. I'll probably see you in the halftime report next week, one of the days, and if not next week, being a short week, probably the week after. So and keep an eye out over on Twitter. Of course, you guys know the drill. You are always welcome to hit me up at FrankMartin23. Of course, if you're new to the channel, welcome. We're certainly glad to have you. We always encourage you to subscribe, hit the notification bell. Join us on the different social media platforms if you use them. I'm the Twitter guy, as you know. So keep an eye out over on the Tackle Twitter. I've got to figure out some things as far as how to do stuff. You guys know me in technology. But once I do, I think maybe I'll have a few new fun things that we can do over there as well. And likewise, Jimbo, you guys have made my afternoons a heck of a lot of fun. I've really enjoyed doing it. I'm definitely going to be bored next week at 2:30. I'm going to be moving on to the next phase of my routine. I'm going to be thinking, wait a minute. I know me. I'm a creature of habit. I know next week's going to be really hard on me. Probably should just take a nap is probably what I should do. That way when I wake up, we'll see if that actually happens. Probably not. So I appreciate it, Jimbo. Appreciate everybody, guys. It has been a pleasure. I appreciate everybody who's been with us from the beginning, joined us along the way. It's been about a year. We've done the recap. So who knows? One day we might do another recap, or maybe we'll come up with a weekly show. We'll come up with something. We'll definitely come up with something. I like to do this, and I think it can be helpful for some of you guys. Seems like some of you like it at least. So there you go. I'll figure out something. Me, Jimbo. Technology. I just got beat up. I just spent 8 hours last night trying to fix a computer. I promise you, I'm not figuring out anything new technical this weekend. So this weekend my brain is going off on that side, but I do plan on coming up with a few new things for you guys for sure. So keep an eye on the Tackle Twitter. That's probably the easiest place, but this is by no means goodbye. This is just see you later. I'll see most of you guys on Tuesday somewhere. So yeah, it has been, it was about a year. It might've been just a wee bit longer or wee under, but I think it's been a little bit over a year. I remember last summer I went to my brother's, I went and visited my brother, and it was the summertime. I don't remember exact when. It could have been September, it could have been July, but I do remember doing the recap from his house that week. So I know it's been a year-ish. So it's been a lot of fun. So thank you all for joining me. Thank you for making it a real good time for me to do it. Thank you for putting up with all of my technical issues, of which we've had a highlight reel. My favorite will always be when the mic and the mouse went out at the same time, and all I could do is wave at you. And then I had to just turn the computer off. That'll always be my favorite crashing memory. I've got a few of them. So, all right, ladies and gentlemen. Well, as always, it is my pleasure. I appreciate everybody's time. Be sure to join us over at Tackle Trading. If you're a pro member, be ready for those reports. We'll get them to you here tomorrow. If you're not a pro member, this is a great time to head on over to tackletrading.com. Try us out. We got a free 15-day trial. We're always happy to give you so you can see what we're up to on the other side of things. So, hey, thank you, Jimbo. Thank you, everybody. You guys have a great 3-day weekend. Check the futures when we get going into Tuesday morning. We'll see where this one goes. Have a game plan for the bulls, for the bears. We're at resistance. That's an important price point. I love when we're at resistance. We just have to be, or support, because either it holds or it breaks, right? Something's going to happen one way or the other in the not too distant future. Be ready for both potential outcomes. Sure, you probably have the one you think's the most likely, and that's okay, but be ready for both outcomes. So, all right, guys, thank you, everybody, for making the recap a lot of fun. Had a lot of fun doing it with you guys. I'll see you guys here very, very soon over at Tackle Trading for sure. So if you're ever bored and want to say hello, you know the drill. You can always find me at FrankMartin23 on Twitter as well. And be sure to join us over on Tackle's Twitter. That's the easiest place for me to share any new things or maybe bounce some ideas around with you guys. So, all right, guys, have a great weekend. Be safe if you're traveling. Be safe if you're in Florida, and be ready for another who knows what week as we get into September. We'll see where this one takes us. All right, everybody, thanks for your time, and we'll see you soon. Bye now.